Welcome to Talk Tickers, where we break down the latest earnings calls for experienced investors. And today, we are diving deep into Tesla's Q3 2025 results. It's a fascinating one, folks. You know, the numbers for this quarter tell a really conflicting story. I mean, on one hand, you have this massive revenue beat, driven by some seriously strong deliveries. But that's completely overshadowed by an earnings miss that, well, it sent the stock tumbling after hours. Let's get into it. All right, first things first. Let's just run through the headline numbers, the ones that really define the quarter for Tesla. Get this. Tesla generated a record-breaking $3.99 billion in free cash flow. That is incredible. They ended the quarter with a massive $41.6 billion cash position. We're talking about a serious war chest. But here's the pressure point. The GAAP gross margin came in at 18%. Now, that's down 185 basis points year over year, and it's getting squeezed pretty hard by tariffs and lower regulatory credits. This is the number that had a lot of people worry. And on the operational front, things looked good. Deliveries were strong, hitting nearly 500,000 vehicles. That's up 7% from last year. So people are definitely still buying the cars. So here's the crucial takeaway from the scorecard. The top-line revenue and the cash flow, they're hitting records, no question. But the bottom line, the profitability, it's really feeling the strain. Okay, so now let's move on to management's story, because this is where you can see how all these pieces are supposed to build toward their much bigger long-term vision. On the earnings call, management focused really heavily on the future. They were highlighting the Robotaxi rollout, a whole new generation of energy products, and maybe most importantly, the immense potential of their custom AI silicone. And this quote, it just brilliantly illustrates their confidence. Musk said that with a clear path to achieving unsupervised full self-driving, the plan is now to just expand vehicle production as fast as humanly possible. A shockwave, as he put it. But, you know, despite this incredibly ambitious narrative, the market's immediate reaction was, well, let's just say it was a bit cautious. Shares fell roughly 4% in after-hours trading. That's a pretty clear reflection of the market's concern over profitability right here, right now. So this brings us to the core tension of the quarter, doesn't it? It really explains that negative price action. What's going on here? Look, management is out there selling this world-changing AI and energy story. It's huge. But investors, they're focused on today's numbers. They're looking at margin headwinds from tariffs, declining credits, and the massive execution risk tied to these really ambitious autonomy timelines. So, how do we position ourselves for what's next? What's the move? Well, here is our take on the path forward. We are assigning a market perform rating, and here's why. It reflects the balance between that immense long-term potential and the very significant, very real near-term hurdles in profitability and execution. Given this deep divide between the bull and bear cases, what we're calling the outrageous but plausible trade is a volatility play. It's structured to profit if the stock makes a major move in either direction over the next, say, 12 to 18 months. It's a bet on a big swing. So that's our analysis of Tesla's Q3. As always, do your own homework. This is not financial advice.